This is University Credit Union, and we are doing our first-time homebuyers webinar. And we're going to, just a few of the housekeeping items. If you do have questions through this presentation, we'd welcome you to type your questions in, and then throughout the presentation, we'll try and cover those questions. Additionally, we want to welcome Joseph Gordon. He's with Select Group Realty with the Gordon Real Estate team. He's going to be our guest agent today that's going to cover information for first-time homebuyers through the purchasing process. For this presentation, this is geared towards the first-time homebuyers, and for this presentation, we're going to be using a certain scenario. This scenario we're going to be using and covering, information that we're going to be covering is programs that are available especially for first-time homebuyers. At University Credit Union, we have a vast selection. You can cover conventional, FHA, VA. We also have fixed rate, adjustable rate loans. We also offer short-term construction and jumbo loans. Just some information, most first-time home buyers fall into the category of conventional or FHA or VA, but we do offer a full range of products for purchase and refinance transactions. What we would like to cover in this presentation is what you're going to need to expect or what you can expect through purchasing a home. We would like to cover the information on the application, what you'll be getting as far as a pre-approval, and then the process that you'll go through in finding a home, and additionally the formal approval and some of the things that'll happen through that process. Now, just quickly, the information on an application, what you can expect to fill out on an application. We're going to have you fill out a mortgage application, and that's going to also include some follow-up information. For instance, you're going to be asked to provide pay stubs, W-2s, perhaps tax returns, depending on how your income is structured. That information then goes from there and is evaluated, and you receive a pre-approval. Now, that pre-approval gives you an idea of what mortgage you can qualify for. So it'll tell you how much you can afford to finance and what the purchase price will be. And we'll discuss down payment options and how much you'll be required to provide at closing. The finding a home is the tough part for us and for you. You have to go through and find the home, and Joseph will go through that process with you of what to expect through that. And then once you find a home and are under contract, we'll issue what's called a formal approval. That formal approval gives you all of the final information that's going to need to be provided. So if there's additional pay stubs or down payment information, during that time after you're under contract and you have this formal approval, we'll order an appraisal on the property and title work, and we'll go over that just a little bit further. And once you have all of that information is in and evaluated, that's when you'll be closing on your property. That's once everything is in and evaluated, the appraiser or the underwriter will evaluate the information, give us a formal go-ahead, and then you'll be closing on it. That's when you'll bring the rest of the funds to closing and receive your keys to your home. Now, there are a lot of variables in qualifying for a home. There are a lot of variables that will affect your payment. The down payment for a first-time home buyer is typically somewhere around 3%. On a conventional loan, it's 3%. On an FHA loan, which is a government-backed loan, it's 3.5% for minimum down payments. And that down payment will have a significant effect on what your payment is. You'll also notice that when you purchase, if you purchase a condominium or a townhome, if there's HOA, and HOA stands for Homeowners Association. If there are HOA fees, then your total overall payment needs to be reflective of including those fees in. So we'll qualify you with those payments in it, or with those expenses in it. PMI stands for private mortgage insurance. PMI is also a big effect on your payment. When you're putting 3% down, anything less than 20% down includes private mortgage insurance. Now, with a credit union, we'll go over this a little bit further in the presentation, but with a credit union, you do receive lower fees through the PMI companies. They do offer a discounted rate to the credit unions for the membership. Again, in your payment also, property taxes will have a big effect on your payment. Property taxes vary, especially throughout the state of Utah, depending on the area that you're purchasing. When you do look at a property, you're able to ask your agent to find out what the property taxes are so that you have a good understanding of what would be included in your payment. Homeowners insurance is the amount of is the coverage on the home itself. That's up to you to choose. You simply just need to let us know what company you're going to go with, and we'll include that in your payment as well. And that just depends on whatever that actual amount will be set aside for you in a monthly payment. And then credit. Credit is probably the single biggest item that can affect your credit, or your payment, sorry, your overall payment. When you get a mortgage, your interest rate and the terms and everything are based, the interest rate, the PMI, the homeowner's insurance, all of those things are based off of credit and priced off of credit. So your FICO score is going to play a big role on what your end result is as far as a mortgage. The better your credit, the better your rates are, and the better the fees are going to be. Credit, I've been asked a couple of times, credit scores, the minimum credit score that we will offer with FHA is 580. As far as conventional, 620 is your minimum FICO score for a mortgage. The higher that you can get your credit score up, the better, again, the better that the interest rate and the better the fees will be on your PMI insurance. Now this is just a quick example for you. If you'll look, this just goes to show you what credit scores, the impact of credit scores have on what fees you pay. Now if you'll look at the column that says 3% down, at 3% down, if you have a credit score of 740 monthly, on a purchase price of $300,000 monthly, your PMI insurance would be $160. Now, if you have a FICO score of 640 in that same column, you'll see that your PMI insurance would be $476 a month. That's a significant difference, and that difference also limits the amount that you can qualify for. So if you look at that and see the savings difference, just 300 and some odd dollars, that's a lot of money that you could be able to qualify for more of a home. Likewise, on the 5% example, if you look at the 5% down column, 740 FICO would give you a mortgage insurance of $105, and 640 likewise would be $319. So you can see in this example that the better your FICO score, the better your fees are going to be as far as mortgage insurance. Now this just gives you a comparison of what PMI insurance would be with the credit union versus another institution. The credit union gets priority pricing with our PMI companies. And if you were to get the same coverage with another institution, you can see the difference in your savings is 30, let's see, 25, 30, some odd dollars. It's amazing the difference this makes. If you translate that into a down payment or into a purchase price, it allows you to purchase about another $14,000 to $15,000 in purchase price. So you can see, again, coming with the credit union and the discount on PMI insurance allows you to purchase more of a home. Okay, in addition to your down payment, we want to make sure that when we meet with you and we work through the qualifying, that you're prepared for the other costs and expenses that you're going to in purchasing a home. The closing costs in purchasing a home are those costs that you pay to your lender and those that are involved with the transaction. So you have a fee that comes to the lender, which is referred to as an origination fee. Then you also have fees like title fees and an appraisal, credit, your tax service fees. All of those fees are referred to as closing costs. The appliances, we want to make sure that you're prepared for the future expenses that you're going to have in a home as well. So appliances, furniture, if you have repairs that need to be done on a property, window coverings, a lot of people don't even think about those things before they're purchasing. And we sit down with you and counsel with you and cover some of those things that you're going to be facing so that you have a good overall experience with the purchase of your new home. There's also expenses versus condos versus single-family homes. If you purchase a condominium or a townhome unit, you're in an association that perhaps the yard would be taken care of, and other things would be taken care of. In a single-family, you're on your own. You get to cover those expenses, and so we want to make sure that you're prepared for those, including some of the big things and even the small things like yard tools. We want to make sure that you're prepared for the expenses that you're going to be facing. A question that we get asked often is, if you can't find a home that you are looking that you would like to buy, can you build a home? And the answer is yes, we would love to work with you, and we do offer construction loans. We offer construction for primary residences and second homes. Those are the only ones that we offer. And we also offer a single closing or a two-time closing option. There is a lot of information that goes into construction loans, and so we won't go into a lot of that now, but we will do up to 95% financing on the construction of a new home. Now, one thing I wanted to cover, we do get asked a lot of times on this question, construction loans, when you look at a home that's for sale, if you're looking at a home from maybe some of the bigger builders, the Ivory Homes and Destination Homes, those types of builders, and the home is going to be built, you actually don't need to worry about getting a construction loan. They do the construction, they take care of all of that, and then you just have to take care of the final rolling over into a long-term loan when you purchase. If you're talking about a construction loan with us, we talk about building a custom home. So you would find a piece of property, get a contract with a builder, and build a custom home. Those are two different scenarios that you would be looking at. But if you do have questions about this, we would love to talk to you, and you're welcome to either type in the questions in this or you can contact us direct. We do have contact information at the end of the presentation for you. So why now? Why is a good time? Why is now a good time to purchase a home? The market is a great market right now. There are a lot of opportunities for first-time home buyers. I know we hear a lot about the values going up and things, but real estate is always a really good investment. It's a good investment now, and it's a good investment for the future. Interest rates are still historically low. Historically low. Interest rates are still hovering right around that 3 3.75% to 4% rate range. They're good. The fees are good. It's always a good time to buy real estate. So we feel like it's a great time to get investing in real estate for your future. So I'm going to take just a minute, and I'm going to see if there's any questions and answer any questions that might be there. Okay, one of the questions, that's a really good question. How is the credit score calculated for a married couple? Thank you, that's a good question. When you pull a credit report, when we pull a credit report, we pull what's called a tri-merge report. That tri-merge report pulls 3 credit scores per person, and we take the middle credit score, the middle low credit score of those 6 numbers. So 3 for one person, 3 for the other. We pull the middle low, and that's what we use for calculating. So if you fall in that category, you can pull your credit scores. You can go and check your credit, see what those scores are. The middle low is what we would use for pricing on the loan. Good question. One of the other questions that I've been asked in this presentation is servicing of the mortgages. We service our loans here at the University Credit Union. Once you do a mortgage with us, we keep that mortgage for the life of the loan. And so you will make your payments to University Credit Union for the life of that loan. Okay, I'm just going to show you really quick where you can find our information. So if you go to our website, this is the benefit of the live webinar. If you go to our website and you just hover over the Home Center, then over to Contact a Mortgage Consultant, this is where you can contact us. If you click on that, it brings up all of the information. We have representatives in 7 different branches. And if you want to go to a different branch, all you have to do is reach out to us and we'll set an appointment and meet you. Most all of our consultants are mobile. They'll go anywhere you would like to meet. We want to make sure it's convenient for you. Also on our website, there are a lot of different resources that you can utilize. You'll notice if you hover over the Home Center again, and you go straight down under resources, you'll find under there that there is Wiki University, there's mortgage calculators. So a lot of information on this website, and so I encourage you to go to that website. I know you all know where it is because you found us here at the seminar, or at the webinar. But we'll also post on here. We'll also post information and forward to you after this webinar. We'll post this webinar so that if you want to go back and re-listen to it, you're welcome to do that. Okay, I'm going to turn the time over now over to Joseph Gordon, and he is going to cover the purchase part of this presentation.
Okay, so about 90% of homes are found on the internet, and so when you're choosing a website for your home search, it's important to find one that has some really specific tools on it. The first is making sure that it has a live feed to the MLS for the state of Utah. That way you know it's updated in real time. If a home comes on the market or off the market, it's going to reflect on there right away. You're going to be getting accurate data. You also want to make sure that the website you use, you can plug in your search criteria, and then when new listings pop up for sale that kind of fulfill your criteria, they automatically send those listings to you every day. Another thing that's really important is automated updating, like I mentioned. You know, if a home gets an offer on it, goes under contract, you want to make sure that it reflects on the website, as well as if a home sells or if there's a price reduction. And then lastly, the ability to save your search criteria. You know, there are a lot of really large home search websites out there like Zillow and Trulia and Homes.com, but unfortunately they have to be manually updated by the agents and the homeowners, and so sometimes the data can be inaccurate. So as a very awesome free tool for the members of the University Credit Union, if you go to that Home Center drop-down menu, as Jen mentioned, and you go over to Search for Homes and click on that, you'll have private access to the entire MLS for the state of Utah. You can register there, you can set up your criteria, and just like I mentioned, all those tools that you'd need that are really important, you'll find on that home search. Now, when you click on that, if you want to go, perfect. If you click on that, this will be the screen that you see, and you'll plug in, you know, the price point you'd like to be at, bedrooms and bathrooms. You can plug in the city that you'd like to be in, or cities. You can even plug in, you know, the size of the garage that you'd like. You can get very specific. Now, when you see that list of homes pull up, if you see one that you like, all you need to do is click on Home Showing, and within the hour, either myself or one of my team will get back to you, and we can set up a showing for you on the house. Now, when you find that house that you absolutely love and you're ready to make an offer, there's a few initial steps that you'll go through. The first thing you'll do is put down what's called earnest money. Now, the earnest money is usually anywhere from 1/2 to 1% of the purchase price, and this basically shows the seller that you're serious about the house. Now, remember, just because you put it down doesn't mean that you lose it if you decide not to buy the house. There's actually 4 key deadlines in the offer that protect your earnest money should you need to cancel for any reason. Now, normally this earnest money gets deposited with the real estate brokerage. Then, like I mentioned, when you close, it goes towards your down payment at the closing. Now, when you sit down with your realtor and your loan officer to review everything, the first thing you'll want to make sure you're clear on is the purchase price you feel good about. Your realtor should pull up some recent comparable sales in that neighborhood, should look at market trends and, you know, how strong employment is in the area. And then also look at, you know, competing offers. You want to have your realtor call the other agent and see if you're competing. That way you'll know how strong you need to come in on that offer. You know, it's important to go over that down payment again with your loan officer so that you're really clear on, you know, which loan program you're going with, where you're getting the funds for the down payment from. And again, I can't emphasize this enough. The loan officers at the University Credit Union are all rock stars and are amazing what they do, so they'll make sure that you're really clear on this. Third, you're going to be going over your monthly payment once again. So once you choose that price you want to offer with your realtor, you know, make sure and reconnect with your loan officer at the University Credit Union. Make sure you're clear on how much your principal and interest, taxes, and homeowners insurance are going to be. And if you're buying a condo, make sure that you know how much that HOA fee is so you know what your total is. And then lastly, you know, make sure once again that you're clear on what your closing costs are going to be. You know, these are the fees that it's going to cost you to set up your loan. And the good news is that even in our market right now, about 90% of sellers are willing to pay the closing costs if the offer comes in strong enough. So make sure that you talk to your realtor about asking the seller to do that. Now, when you make the offer, a lot of buyers don't know this, but you can actually ask for additional, furniture items and different things in the house if you like something. If there's a pool table or appliances or a hot tub, you can ask for any of that in the offer, and then set up a separate bill of sale to negotiate that. You probably can't ask for their dog or their cat, so sorry about that. But these items here, you definitely could. Another thing that's important to talk about is the home warranty. Now, most sellers will pay for the home warranty if you have your realtor negotiate that for you. Home warranties cost between about $340 and $450 depending on how much you want coveraged. And most of them cover all the major systems in the house for 1 year. So your electrical, your plumbing, your appliances, everything. And like I mentioned before, the vast majority of sellers will pay for this if the offer is strong enough. So be sure to have your realtor negotiate that. And then once you have that set up, you can actually renew your home warranty every year on your home for $300 or $400. So this way, if a major system goes out, you're not stuck with a $1,000 bill. So when you make the offer, there's 4 key deadlines in the contract. And again, all these deadlines are there to protect your earnest money, to make sure that that's safe if you need to cancel. I'm going to briefly run through them right now, and then we'll go into a little more detail. The first is your seller disclosure deadline. Now this is usually 3 to 5 days out from when you make the offer and it gets accepted and you go under contract. Now the seller disclosures are a 6-page document, and they ask the seller about 30 questions about the house. I mean, it asks them if they've had, water damage, if they've had roof issues, even if they've cooked meth. I mean, it asks them everything you can think of. And what this does is it legally protects you in writing, so that if the seller is dishonest about this, which rarely happens, but if it does, you have something in writing protecting you so that you can come back later and take legal action to have them fix what they weren't clear on. But that's why we do that. Now, this is your first opportunity to cancel. So if there's something on these seller disclosures that's a big red flag for you, for example, if they say, well, we have rodents every year when they irrigate the fields behind our house, and you don't want to deal with that, you can cancel, keep your earnest money, and move on. However, if everything looks good on there, we would go on to our second deadline, which is our due diligence deadline. Now, this is usually 10 to 14 days out, and this is your second opportunity to cancel if you need to. And during this time, you'd want to have your inspection done. Most realtors have a really great inspector that they prefer, but legally it's up to you, whoever you'd prefer. So if you have an uncle that does inspections, you're welcome to use them. Now keep in mind that you can also have anyone you'd like look at the house. So if you have a friend that's an electrician or a plumber, or if you have a family member that works in construction, you can have anybody you'd like walk through it, just to make sure that you feel good about it. Now, if there are any issues with the house that you want to ask the seller to pay for and to repair, this is the point in which you'd do that. And at that point, the seller would either come back and agree to everything, or they'd say no, or they'd agree to some of the items, in which case you would negotiate that at that point. Now, the third deadline, if everything looks good on that due diligence deadline with the inspections, we'd go on to our third deadline, which is financing and appraisal. Now, this is usually 21 to 30 days out, and this is our opportunity to make sure that everything on your loan is completely done and that your appraisal has been ordered by your loan officer and come back at the value you're buying the house for or higher. Now, if that appraisal comes back lower, excuse me, then this is our opportunity to renegotiate that price with the seller. If the appraisal comes back higher, then you can smile and high-five your spouse and know that you have instant equity in the house. But this is really important because, fortunately, the loan officers at the University Credit Union are all, like I mentioned, amazing at what they do. And so they'll make sure that everything's done on time and that you're clear on your financing. Now, once all that's good to go, we go on to our fourth deadline, which is settlement. This is usually 30 to 45 days out. This is when you sign all the final paperwork at the title company and get your keys. And I just realized that I ran through all of those prior to this, so I'll just do a quick refresher. Seller disclosure deadline, again, 3 to 5 days out. First opportunity to cancel. It's that big document where they have to answer all the questions about the home. And again, it protects you in writing in case there's something that they don't disclose to you. Really important. Second is that due diligence deadline, 10 to 14 days out. Make sure you have that inspection done, any other tests you want to have done, request repairs, or if you have a change of heart or if you need to cancel at that point, that's your deadline for that. Third deadline is that financing and appraisal deadline. Again, 21 to 30 days out. You want to make sure your appraisal's done, renegotiate the price if you need to if it comes in low. Make sure your loan is completely approved. And then, of course, this is your last opportunity to cancel before that earnest money goes hard. So you want to make sure that everything is good to go before passing this deadline. And lastly, of course, is that settlement deadline. This is 30 to 45 days out. You'll walk through the house 1 to 2 days before you sign to make sure that it's still in the same condition, and then go to the title company, sign your closing documents. Takes about 45 minutes to an hour. And then a couple of things I didn't mention. This is important. You want to be sure and bring 2 forms of ID with you. You know, a driver's license or a debit card will work. You can bring a cashier's check for your down payment, unless it's, I believe, over $10,000, then you'd need to wire that. And then the loan will usually fund and record the next business day. That's when you get your keys. And this is when you celebrate and hug and high five and you bought a house.
Okay, so a few more things. I did have a question come up. We're going to take some questions. And so if you do have questions, go ahead and type those in. One of the questions was, what is MLS? I'm going to have Joseph address that.
So the MLS stands for the Multiple Listing Service. This is the primary source for listings for the state of Utah. There's actually a state organization that runs this. All of the agents in the state have to pay to keep the site up, and it's going to be your, the MLS is your most primary source of information. The home search site with the University Credit Union was built with an actual live feed to the MLS. So you get all that accurate data, and it's updated in real time for you.
Thank you. One of the questions that we had was, when would it be beneficial to do an FHA loan over a conventional loan? And that question is a really good question. If your FICO score is leaning towards the low end, so leaning towards a 620 or 630, what we'll do is we'll run the scenario for FHA versus conventional and see what works best for you. We'll run those numbers, we'll give you the examples, and then in the end, you're the one that knows what's best for you. So we'll give you that information, help you kind of think through it, help you evaluate it, and then you can make the decision what works best. But typically, if you're on that lower end with a FICO score, an FHA might be the better way for you to go. Another question that we had is, let's see. Yes, you can share. One of the questions is asked is, when the webinar is sent after the meeting, can you share it with a different email with another buyer? Yes, absolutely. You're welcome to share this information. We'd encourage it, and honestly, we appreciate you sharing it. Another question is, why do you choose University Credit Union over someone else? We love our members, and we love an opportunity to serve them. We are a full-service lender. And so a lot of people know us as car loans or credit card Visa loans or Visa people, but we are a full service lender, and we really love to do mortgage loans. Our mortgage fees are, as an industry, are significantly lower than many of the lenders around us, and with servicing our loans, that's an additional benefit. So we really love an opportunity, and we appreciate the fact that you're considering us being at the webinar, but we'd really love an opportunity to work with you. I'm going to give it just a few more minutes and see if there's any additional questions. So one other question that came through is, are there any deals for first-time homebuyers? That's a great question. Yes, thank you for asking that. We offer right now, included in the email that you'll receive a $500 coupon that is good for $500 off of your closing costs, or we'll pay for your appraisal, one or the other. So up to the $500 we'll offer off on the closing costs, and that's just a special that we do for our first-time home buyers. So yes, that's a good question, and we'll send that to you. As far as additional deals for first-time home buyers, just a note on that. We do offer a 3% down conventional loan through Fannie Mae, as I mentioned earlier, that is special for first-time home buyers. That is not available at every lender. That is something that is significant to the credit union. So that's something special for our first-time home buyers. Any other questions? Okay, I just want to thank each of you for choosing to join us today. We appreciate it, and make sure and contact us with any questions. We'd really like it if you would tell us how we can help you. Tell us if this was beneficial, reach out to us, and let us know how we can help you in the purchase of your new home. We're excited to be a part of that. Thanks again for joining us, and we'll see you next time.